Good morning, everyone. You are watching live daily market outlook from Wisdom Brokers for Monday, 6th of May, 2013. After 3 days of heavy activities in the markets due to important data being released, that started with the FOMC's decision keeping the rates unchanged. Then ECB cutting the rates by 0.25%, with the more significant impact on the market seen on the comments of Mario Draghi that said that ECB is technically ready for charging the negative rates that pushed the euro significantly lower. And then finally the quite positive US jobs data released on Friday, keeping the overall market positions, most of the major pairs still within the previously established range despite heavy movements up and down seen in past 3 days. Except the dollar yen that has established a fresh positive trend and is approaching the recent peaks and the psychological barrier at 100.00, and crude oil that is again one of the top performers. The rest of the instruments held within the previously established ranges, as I said, and held below the recent tops or above recent lows, being still unable to clear these barriers and establish fresh direction. As said, one of the top performers, dollar yen, remains in the positive path following a release of better than expected and quite optimistic data released, US NFP data released on Friday. Extending this morning at the beginning of European session gains to 99.40 so far, and holding a positive tone for a possible attack at 100 barrier. Increased risk appetite seen in the markets past the recent releases sees potential for dollar yen for a possible attack, as we said, at 100 barrier. Previous peaks are parked at 99.74, 99.85, I think, and then 99.93 ahead of the psychological barrier. Euro dollar holds around 131 at the beginning of the European session, being entrenched within a tight range during the Asia, and slightly above 131.00 following last week's close at levels above 131.00, slightly above 131.00, still well below recent peaks at 132 and 132.41, and holding somewhere in the middle of the 129, 132.41 range, still being in the range and still directionless. British pound holds positive tone following another attack at 156 that was seen last Friday, and currently consolidating gains while holding above 155 keeps the upside in focus. As said, dollar yen is positive and heading north, while pardon, the Aussie dollar came again under pressure after last Friday's rally, being capped at 103.20, and the overnight gap lower opening and the fresh weakness during the European beginning of European session keep focus at the downside. We have the key supports at 102.20, which is the double bottom, and then psychological 102, with the negatively aligned short-term studies still keeping focus on the upside, on the downside, pardon. While commodities remain the top performers, crude oil hit fresh high during the Asian session at 97.11, and nearly fully retraced the fall from 97.68 1st of April peak in a strong rally off the recent low at 85.90, with the positive tone dominating and keeping the upside firmly in focus, though the overbought conditions might see some corrective consolidative action before the pair before the price regains strength and for possible push through 97.68. And finally, from a brief outlook from the commodities, gold holds steady as recovery of last week's fresh low at 14.40 surpassed the previous highs 14.82 and 14.85, and the gains were capped at 14.87. That marks a 61.8% Fibonacci retracement of the fall from 1590 to 1321, which for now keeps the upside limited. Any break higher is required to open psychological 1500, while on the downside 1440 is seen as the key support, and the break below would revive bears. From today's calendar, due to UK being out for holidays, still a lot of activities in the Europe. Focus is on Spanish data, that unemployment change that has already been released. Unfortunately, we still don't have the figures. I'm going to tell you in a while. I think it's something to be negative, minus 46.1, well below the release of minus 0.5 of the previous month, and much optimistic forecast at 17.1. Now the data show that Spanish unemployment is still at quite high levels. Pardon. With the Spanish services PMI coming at 44.4, well below the release of 45.3 of the previous month of March, and the forecast at 45.8. Services PMI data from Italy and Eurozone are due later, 7:45 and 8 o'clock GMT respectively. 46.3 is the forecast for Italian compared to 45.5, while the European services PMI for April is expected to stay unchanged at 46.6. Centix investors' confidence for May in Europe sees slight improvement, still negative figures. Minus 14.6 is the May's forecast compared to minus 17.3 in the month of April. This is due at 8:30 GMT. 9 o'clock is the retail sales for March from Eurozone. Minus 0.1% is the forecast for March compared to minus 0.3% in the month of February. From across the ocean, building permits in Canada are due at 12:30 GMT. Drop by 2.7% is seen in March compared to 1.7% release of month of February. At 1300 GMT, we have the ECB President Mario Draghi having a speech, and then at 1400 the Canadian IV PMI for April, 58.3 forecast, quite lower, below the March's release at 61.6, and basically these are the highlights of today's European and American session. Still not lacking the activities and not lacking the data, despite having a Monday. Focus, as said, was on the Spanish unemployment change, and then now turns towards the PMI data due from Italy, and the more important from Eurozone, with the euro being pressed now after a release of a quite disappointing Spanish unemployment data, and pushing the price now below the 131.00 support. We're going to take pardon, we're going to take a look now in the technicals and see the expectations for today for all major pairs and the commodities, with the questions and answers session expected to follow after the presentation. Starting with the single currency, as said, no significant change has been seen in the euro's performance in past 2 weeks or so, as the upside, as we can see, stays capped. Brief trip above 132 did not produce much of the recovery. 132.41 was the highest seen, and then the price sharply dropped lower and formed the head and shoulders pattern, with the support being found at 130.30 zone. We had another double bottom here. The bull trend line drawn of 127.44 so far held the dips despite being tripped a few times, but it seems that the euro will not be able to sustain gains, as the overnight, last Friday's intraday high at last Friday's high at 131.58 was all seen so far, with the fresh weakness below 131.00 threatening immediately the trend line support, which stands currently at 130.72, and then we have 130.30, very significant support ahead of psychological 130.00. As we can see, the 4-hour indicators are now falling below their midlines and traveling south. That keeps the negative tone more in play. From the hourly structure, as shows on the Fibonacci retracement of the recent fall from 132.41 to 130.32, 61.8% retracement of the entire fall has been seen so far, and the levels, these levels cap the upside for now. Again, negative tone is prevailing on the hourly chart studies, and keeping more focus again towards the downside, where we have 130 as initial support and stroke support. This is also double bottom of the hourly chart, and the penetration of this support would be quite negative for the pair, as it may trigger further weakness. From the daily studies, the tone is still rather positive, though the price action is entrenched within the range. On the downside 129.50, on the upside 132.41 with the 20 days moving average on the daily chart so far holding the recent price action, and the main support is seen on the 200 days moving average, currently standing at 129.65. On the upside, approximately 50% of the entire fall from 137.10 to 127.44 is the cap for now, and basically break of either side of the range is expected to give us fresh direction. This is the range established sometime at the beginning, the second week of April, and so far the pair holds with these within these parameters, despite quite heavy movements in the past 3 days, being still unable to clear any of the limits, either upside or downside, to establish fresh direction. So basically we have 132, 132.40 on the upside, and 130, 129.50 on the downside, with break of the later barriers seen as a trigger for a fresh direction for the single currency. From the other side, the British pound holds positive tone and consolidates recent gains against the US dollar, as 156.00 holds the upside so far, but the tone is still slightly positively aligned, despite showing some initial bearish divergence seen on the 4-hour chart, as the RSI and the MACD were falling down and the price was ascending. Now this is seen as a quite high risk for the pair, and they will be confirmed on a break below low of 154.78. This is last Friday's low, and it's reinforced by ascending 55 days moving average. Holding above 155, 154.78 will still keep the positive structure in play for possible renewed attack at 156.00. Now hourlies are in descending mode, but still holding in the positive territory, and ideally reverse should be seen somewhere around 155.40. That marks approximately midpoint of the recent near-term range of 156 on the upside and 155 on the downside, part of 154.78, to keep the focus at the upside. Now the daily positive tone persists as the pair remains in the ascending mode of a recent low at 148.30. This is the low of 12th of March 2013, as at 50% so far being retraced, and this is now main cap for the pair in the near term, as several attempts at above 156 so far failed, but still positive tone persists and sees more chances for a bullish resumption on a break above 156.00. As said, on the downside, break loss of initial and good support at 154.78 would bring more negative tone into play, while the break below our another key support, previous high of 11th of April at 154.10 would revive bears and keep the upside intact for the time being. And our top performer is dollar yen, as we said, quite a strong tone seen of 97 base. These are the lows of 30th, 1st and the 2nd of pardon, 30th of April, 1st and 2nd of May, where the good base has been established, and so far the third leg of the recovery rally from 97.00 is commencing from the consolidative range somewhere around 99.00. I think it's better seen on the hourly chart. A brief consolidation was contained down by 99.88, and now fresh strength is heading towards our initial target, which is 99.74. This is the high of 24th of April. Full retracement of the down leg pullback from 99.74 to 97.00 is required to open immediate targets at 99.87, 22nd April high, and the 99.93, 11th of April high, in order to establish a fresh positive tone for a renewed attack at psychological 100 barrier. That is currently in the near-term focus, as a positive structure on the lower time frames keeps the upside firmly in focus, with the bullish crossover at 98.29 now underpinning the 4-hour action, while the the hourly 20 days moving average maintains the bullish tone currently at approximately 99 level, keeping the downside protected from now. On the daily, we have still range trading between 99.90 on the upside and our breakpoint at 96.70, previous low of 12th of March. Slightly above this is the 97 base, with the positive tone being established again on a bounce from 97.00, and now focusing the upper boundary of the short-term range break, of which is to resume a larger uptrend of dollar yen that commenced from September 2012 from the record lows at from the low at 77.12 approximately. That will look with break above psychological 100-day yen barrier, seen as a trigger for a fresh bullish resumption. And according to the daily chart, this current range is seen nothing than consolidation, as long as 96.70, 95.80 levels hold the downside protected. Another major pair that came under pressure is the Aussie dollar against the US dollar. Pardon. As the upside action seen last Friday has told at 103.20, and then subsequent decline following the weekly opening with a slight gap lower, and the fresh extension seen during the Asian session, now threatening immediate support, which is 102.60, the bull trend line support. Bull trend line drawn of 102.20 through 102.41. Now this is coming under pressure. 1 hour chart indicators are heading south and approaching their midlines that sees increased downside pressure, while the 4 hour indicators are already negative, and the overall price action being capped by descending bear trend line drawn of 105.81, peak of 11th of April through 103.80, peak of 1st of May, with the recent high of last Friday at 103.21 being well below the trend line. Immediate threat is seen on the test of strong support and double bottom at 102.20, a break of which to resume the larger downtrend of 105.81 level, close to the multi-month range top, which is around the 106 zone, as penetration of 102 and 102.00 will be a trigger for a fresh extension lower. 102 is the double bottom, as we said. 102.20, pardon, is the double bottom. 102 is the psychological support. Also Fibonacci 50% expansion of the latest down leg from 103.83, and the immediate focus will go down towards 101.56, 61.8% Fibonacci expansion. Then we have 101.14, our key support, low of 4th of March 2013. Also this larger range floor below this 101 comes as the next psychological support, and 76.4% Fibonacci expansion. On the upside, any bounce higher needs to clear immediate resistance at 103.21 in order to avert immediate downside risk. However, break above peak at 103.83 is required to confirm the double bottom at 102 and open way for a stronger recovery. That looks quite unlikely at this point, as structure remains negative on the daily chart, with the upside being limited by 200 days moving average, currently at 103.94. And finally, from commodities, top performer is the crude oil that heads higher with the 97 at 12 seen so far. As we can see on the Ichimoku studies, quite positive tone has been established as the price broke above quite tiny, the tiny Ichimoku, daily Ichimoku cloud, as also the Tenkan Sen line broke above Kijun Sen line that gives a positive tone and supports the further rally for eventual test of our next strong resistance, 97.68 peak of 1st of April 2013, and then we have another one at 98.63. This is 13th of February 2013 peak. Now on the daily chart, studies are well positioned for possible extension. Higher positive tone now dominates as indicators broke above their midlines with the main bear trend line drawn off the peak of 100.72. This is the high of September 2012. Being briefly cracked, that signals possible extension towards our initial target at 97.68. On the lower time frames, a positive tone, but overbought conditions on the 4-hour chart suggest some corrective action that is already commencing from recent peak at 97.12, with the immediate support being previous peak at 94.66. Also close to this, we have the ascending 20 days moving average at 94.22, offering initial dynamic support. From the Fibonacci levels, I think we can better see it on the hourly chart. As we can see, the price is now attempting below the bull channel support that is at approximately 90. I do apologize. 96 level. Now from the Fibonacci levels that are important and should be watched, we have immediate 23.69546 along with the higher low at 95.33. Then comes the previously mentioned the 94.66 higher low that is also close to 38.2% retracement at 94.42, also reinforced by ascending 55 days moving average. Ideal reversal point is seen somewhere around 94.4060 in order to keep the immediate bullish tone, though the break below the bull trend line is initial signal of a possible stronger pullback for now, but overall tone, positive tone still persists. As we can see, the hourlies are quite extended at this point, and the RSI is already emerging out of the overbought zone that suggests correction is the likely scenario before bulls reassert. 4-hour indicators, again, overbought conditions, positive tone with most of indicators holding in the positive territory and keeping the upside in focus. Main risk will be seen in case of pullback below 90.10. This is the low of 1st of May 2013, and this also marks Fibonacci retracement approximately, I would say, 61.8% of the entire rally from 185.90 to 97.12. A break of this level could be quite risky, as this would bring bears back in play for fresh weakness towards downside supports 87.80 and then the final 185.90. So far the upside remains in focus with the corrective action expected to precede a fresh rally towards our initial target at 97.68. And finally, from commodities, we have gold that quickly recovered the recent pullback. I think on the hourly is the best seen. Pullback down to 1440 initially seen on the 1st of May, and then a fresh rally that touched 1487, 61.8% retracement, and subsequent fall down to 1456, being again quite big part of it has been retraced on a bounce to 1478. On the larger picture, we can see that yellow metal is basically entrenched within 1440 and the 1487 range, and still holding in the sideways mode. Slightly positive tone is still seen on the 4-hour indicators as MACD and the momentum hold above the midlines, but this is still a fragile situation and no clear direction at this point, with the break of either side required to to give us fresh direction of the yellow metal upside break as the price recovered quickly and tested the 1487. I would say at this point it's slightly more favored towards the upside, and break above here is required to open 1500 as psychological resistance, and then the previous critical support now acting as strong resistance, and 76.4% retracement at 1526. Conversely, break below initial support at 1456 and more significant 1440, 438. The first one is low of 1st of May, and the 1438 is the previous high of 22nd of April. Would bring more negative tone to play and offer more pressure towards the downside, further retracement of the recovery rally from 1321 to 1487, a low of 16th of last Friday. Would be similar that corrective action has ended, and the more focus will be seen towards the downside, and instead of a break above 1487 would again shift focus higher and extend the recent recovery towards 1500 and 1526. And this is all for today, Monday 6th of May 2013. Please, your questions, if there is any, you can submit them right now. Okay, it seems that there are no questions for today. Everything was, we said everything important. I would like to thank you all for attending our live session. The recorded version you can find in the YouTube under the Wheels of Brokers Forex. For all of you that connected later and missed any part of the session, it will be shortly uploaded into YouTube. We're back tomorrow morning at our regular time at 7 o'clock GMT, and until then I wish you a nice beginning of the week, nice Monday, and of course good and profitable trading. Good luck.